Welcome to Gambling with an Edge with your hosts Bob Dancer and Richard Munchkin. Bob Dancer is America's premier video poker writer and teacher. He's written 10 books, including Video Poker for the Intelligent Beginner and the best-selling $1 Million Video Poker. He helped develop the computer software Video Poker for Winners, and in 2004 he was inducted into the Video Poker Hall of Fame. Richard Munchkin has been a professional advantage player for over 30 years and is in the Blackjack Hall of Fame. His book, Gambling Wizards, Conversations with the World's Greatest Gamblers, is a testament to the many ways you can succeed at gambling. The goal of the show is that you'll be a more knowledgeable gambler tomorrow than you were yesterday. And now, here are Bob and Richard.
Good evening. Welcome to Gambling with an Edge. I'm Bob Dancer.
And I'm Richard Munchkin.
Our guest tonight is Moo the Cash Cow. We've never had a bovine guest on the show before, so I'm curious as how it'll all work out. The closest we had was last week when we had a four-legged guest, but two of those legs belonged to John Chang and the other two to Tommy Highland, so maybe that wasn't so strange. Anyway, Moo will be talking to us about taxes as it relates to gamblers. I was out of town last week, so last week's show was taped early. That means that we haven't spoken about gambling news for a couple of weeks. So let's review some of the stuff that's happened recently. The LV8 Sportsbook announced that 14 bettors have Auburn at 1,000-1 to win the national championship game. Last year, Auburn had a 3-9 record and was pretty pathetic, so nobody thought they had much of a chance. Certainly other sportsbooks have tickets on that team as well. Although the Tigers are 9 points or so underdogs to Florida State in the game on January 6th, they're in the game, and so they could win. It's very unusual that a team comes out of nowhere and is actually in the championship game. I think this will be good for players, especially if Auburn wins. Books will advertise the hell out of this, so lots more money will be spent in the future on real underdogs. Their casinos will make sufficient money off these bettors that the rest of us who bet on more likely teams will get slightly better odds. Did you have one of those tickets on Auburn, Munchkin?
I didn't. And, I'm curious what the money line would be for those people if they want to hedge. It sounds like, they have to lay a lot if they're betting the other side. But
a 9-point favorite is pretty big. I don't have the number off the top of my head, but it's probably 6-1, 8-1, 10-1, something. It's a significant hedge. And it depends on if you had a $2 bet on it or if you had a $100 bet on it. That might be worth guaranteeing yourself some money. Different subject. Online poker giant PokerStars continues to have trouble in New Jersey. It had a deal to buy the Atlantic Club, and that fell through kind of at the last minute to the surprise of everybody. And now they've been barred from entering the online gambling market there for at least 2 years. Now, I have no specific knowledge one way or the other, but two setbacks for one company leads me to assume this is because this company either isn't greasing the right palms or isn't kissing the right asses. Reports I've heard about New Jersey online gaming lead me to believe that they could use an established firm like PokerStars. Munch, do you have any thought on this?
Yeah, I think they have that taint of being, they were in the online business back when it was maybe or maybe not illegal. I mean, they did get out right away when the, UIGEA went through. They weren't like full tilt and hung around until years later. But I think that's what they're dealing with. And, I'm sure there's a lot of money lobbying from the established casinos trying to keep anybody out that they can, to grab more for themselves.
Interesting. Sheldon Adelson, who owns the Venetian and Palazzo here in Las Vegas, as well as some huge Asian casinos, continues his well-financed campaign against online gaming, including have one of his top deputies rail against it in congressional hearings last week. Some people consider the man a joke, But when you're one of the richest men in the world and you're willing to put your money where your mouth is, the joke has to be taken seriously. In a month, we'll be having Jeff Friedman on our show. He's head of the American Gaming Association. He's spoken out strongly in favor of online gaming. We'll certainly have lots of questions for Jeff Friedman about Adelson's comments. Do you have any thought about Adelson's motivations or anything, Munch?
Well, he's a guy who clearly doesn't mind putting his money where his politics are. I mean, he spent over $100 million in the last presidential election. And I just think it's completely, talking out of both sides of his mouth to try to claim that internet gambling is awful, but his form of gambling is okay. I don't know. I don't have anything good to say about the man, and I just don't believe any of it. It's all about money.
Okay. He actually has a form of internet gambling in his casino where you can do wireless sports betting from various places.
Sure. So it's fine for him, but, as soon as somebody else wants to get into the game, he wants to try to monopolize as much of it as he can.
All right. In early December, here in Las Vegas for years, the National Finals Rodeo has come to town, and we see lots of cowboy hats all over the casinos, especially now the South Point, where they have stalls for 1,200 horses in their equestrian center. It's been going back and forth about whether the rodeo will be in Vegas or in Florida starting in 2015. It's all about money, of course. Right now, Florida is offering more, but Vegas is still negotiating and trying to up their bid. For players, having the rodeo in town is probably a good deal, assuming you can stand country western Christmas music. For casinos to offer good deals to players, the casinos have to be making money. Although a lot of players believe the casinos are our enemy, actually other players are your enemy, and the casino is the one who's going to give you the money. Within certain limits, if it's good for the casinos, it's good for the players. Do you buy that, Richard?
Sort of. I don't buy at all that other players are the enemy. At all. I don't feel that way at all. But I definitely agree that the casinos need to make money for us to make money. And especially if you want to make big money, the casinos have to be doing really well because they just can't tolerate it otherwise. So, yes, I'm happy when the casinos are making money because it means I have the opportunity to make more. The other players, I don't look at them. Well, I look at them as the enemy when civilians are trying to get on a table that I'm trying to keep them off of. But other than that, I don't think of them as the enemy.
Well, or if your team is trying to do something and there's competing teams, you might think of them as an enemy.
Well, then, but those are other pros. As opposed to civilians. But
but there are times that they're competing against the casinos, giving the same money that you're after.
There are certainly times when I'm not happy to see other teams or other pros in the same casino I am. Definitely.
All right. Not too long ago, the Massachusetts Gaming Commission ruled against Caesars Entertainment, saying Caesars was unfit to run a casino in the Bay State. Recently, Caesars filed a federal lawsuit against the chairman of that commission, Stephen Crosby, citing conflict of interest, among other things. So far, the battle seems to be fought in the press. Should be juicy. Stay tuned. Do you have a dog in that fight, Richard?
No, but I don't like what Caesars has done to the casinos they own. So
it's all right with it's all right with you. All right, good. A Seattle area automobile dealership called Jet Chevrolet ran a promotion last week where they promised to give away $35,000 to each of 12 people if the Seattle Seahawks skunked the New York Giants at football game. This is a promotion that would likely gain them a lot of publicity, and they wouldn't have to pay off because the Giants are almost never shut out. Well, the Giants were goose-egged, 23-0, and the casino was on the hook for $420,000. Fortunately, they bought insurance for $7,000, and the publicity has been worth far more than that. Richard, were you one of the lucky 12?
I wasn't, but the surprising thing to me about that story was how cheap the insurance was. I would have thought that whoever sold him the insurance could have charged him a lot more. So,
Yeah, that implies odds of, a little over 1% that the Giants would be goose egg. That sounds, if that sounds low, even if it was fair odds, then insurance companies generally have to add, quite a bit for their profits. So,
yeah.
Oh well. James Grosjean, a highly respected player and analyst. He's begun a new blog on the Las Vegas Advisor. Richard, why don't you tell us a bit about James and the blog?
Well, as you say, he's maybe the most respected player out there today, and has written, really probably the best book in 30 years, called Exhibit CAA, which is almost impossible to get your hands on if you didn't get it when it first came out. So it's a real coup, I think, for the Las Vegas Advisor to have gotten him. And so he's just started, and nothing very controversial yet, but I think that may change as time goes on. He doesn't mince words, so I'm sure he'll be ruffling some feathers as time goes forward.
Yeah, there's been only a couple blogs so far, but some of the people who've responded to his blogs are some of the top names among strong gamblers. So clearly he's very respected. All right, let's talk to our guest, Moo the Cash Cow. Moo is an accountant by profession, primarily specializing in state tax controversy. As a player, he played on and or ran several different blackjack teams and played quite a bit online back when bonuses were bigger. Moo the Cash Cow, welcome to Gambling with an Edge.
Hey, how are you? Thanks for having me on the show.
Well, we're both fine, and thanks for being here. First of all, how did you get the name Moo the Cash Cow? That kind of name has to have an interesting story behind it.
Well, I think it just started with, it was like a nickname that I had in middle school, and then it kind of stuck with, and I started using it as an online handle. And then, now that I'm doing accounting and, that kind of stuff, I guess I kind of got known as that because I'm the money guy. I have all these friends that, are hitting me up. They're like, what do I do with this? I got this tax issue, or I got this, what should I do with this thing? So
it sounds like some guy who lends money out for the mob, but apparently that's not who you are. All right. A few months ago, we had an accountant on this show who basically said anybody could file as a professional gambler. Now, we've had some email from other accountants who say that that's just not true. So let's set the record straight. How is it determined if you can file as a professional gambler or not?
Well, this kind of gets down to one of the big problems that I see with kind of the field of taxation and stuff is there's a lot of opinions that kind of get thrown around, and maybe some of them are outdated, some of them are correct, some of them are not, but people, just kind of believe a lot of goofy things about taxes. And one of the most important things is that you really look at primary sources. So that's going to be like, the tax code or treasury regulations, things like that, that will give you a clear idea of what the rules are. And unfortunately, with some issues, we don't have rules that are really on point for what it is. Like, I wish that there was, and I've done research on, is there a certain tax court case that definitively decided what is and is not a professional gambler? Not really. There isn't anything like that. But there's an IRS publication that's really good. It's publication 535, and it describes, it's basically talking about business expenses, but it gives a list of the issue is whether or not you're engaging in the activity for profit. That's what the IRS is looking at, because, otherwise people could just go, hey, I went to Las Vegas and, I played slots for, 3 days, so I'm going to call myself a professional gambler and write off my plane ticket. Well, the IRS doesn't want people to be able to do that. So when they audit people, they'll come in and say, examine whether or not they're actually doing this business to try to earn a profit or whether it's a hobby. And this publication lays out several tests. The most important one, it says here, is an activity is presumed carried on for profit if it produced a profit in at least 3 of the last 5 tax years, including the current year. So if you're making money at something, typically the IRS is going to give you a pass on if you want to take some business deductions associated with that. The issue usually comes in when maybe you're having losses that you want to write off. That's usually when they come in and try to deny you some of your deductions. So it gives several different tests of, determining whether an activity is for profit. It says, among the factors to consider are whether you carry on the activity in a business-like manner, the time and effort you put into the activity indicate you intend to make it profitable, you depend on the income for your livelihood, your losses are due to circumstances beyond your control, you change your methods of operation in an attempt to improve profitability, you or your advisors have the knowledge needed to carry on the activity as a successful business, you were successful in making a profit in similar activities in the past, the activity makes a profit in some years, and you can expect to make a future profit from the appreciation of the assets used in the activity. So there's really no one factor that they're necessarily going to come in and say, oh, well, if you just do this one thing, you're a professional gambler or not. They kind of look at the whole of your activity. And I think probably the most important factor to look at is that carrying on the activity in a business-like manner. So that's going to include things like, did you write up a business plan? With your business plan, did you do financial projections? Did you do accounting records? So you could say, okay, well, I was counting cards, and I expected to make, whatever. My expected value was $35 an hour. I played this many hours. I should expect to win this much, based on a computer simulation or something like that. You want to document that stuff ahead of time and be able to go in and tell them, no, I wasn't just flying out to Las Vegas and playing slots for the weekend. I read some books. I was on reading on internet forums. I
listened to a radio show.
What's that?
I listened to a radio show.
Right. So those types of things that that can show that you were doing this for business and not for just to have fun or whatever. So my opinion would be, if you look at that test and you're doing this, you're spending a significant amount of time on it, you're being serious about it, you're keeping records, those kinds of things, I think that you would be okay, and particularly if you're turning a profit. That, to me, is the biggest factor. If you're making money at this, I strongly doubt the IRS is going to come in and tell you that this is a hobby.
So if you are calling yourself a professional gambler, if you had a losing year, can you carry the losses forward?
No. The IRS, the tax code is really specific about gambling losses. Unlike almost any other type of business, you cannot carry forward losses no matter what. And you actually can't even write off, even as a professional gambler, you can't write off gambling losses against other income. You can only take a loss. Well, let me give you a scenario. Okay, so a guy was playing.
I don't believe that's true. Every other tax advisor says you can if you're a professional gambler.
Well, yeah, what I've read, that there's some tax court cases on it that you can't write the gambling losses off against other income. You can only write it off against gambling winnings. Now, you can write your other expenses. So let's say you lost $50,000 gambling, and you had $10,000 in business expenses doing that, plane tickets, things like that. Then you would be able to take the deduction in that year for the $10,000, but you wouldn't be able to take the $50,000. And that's one of the things that they're pretty aggressive about, that they really don't want you taking a deduction for gambling losses.
What if you actually made a profit at gambling of, say, $20,000 a year, but you also had and you did that for several years in a row, but you had another business, and in that other business, you made $500,000 a year. Now, there can't be too many people in that category, but let's assume that this was the case. Can you be a professional gambler, even though you made all the criteria you listed, but there's this other other thing that you do, which dominates financially.
To me, it seems like it would, looking at that IRS publication. Like I said, if you're carrying it on in a business-like manner. And a lot of this stuff, it kind of comes down to what auditor, like if you were to get audited, what the auditor kind of thinks about it. Because a lot of this stuff, honestly, in accountancy, it kind of comes down to a judgment call. And they may come in and say, oh, well, you've got all these accounting records. You seem to be doing – one auditor may say, hey, it seems like you're real serious about this. Another auditor may come in and say, oh, well, you made $500,000 as a doctor. No, you can't take – no, you're not a professional gambler. So I would just look at that IRS publication or some other tax authorities and basically to have a leg to stand on and say, hey, this is what I did. These are the tax authorities that I'm citing in order to take this tax position. And then you're not just arguing with the IRS, you're not just going back and forth. You really have something that you can stand on, some authority to stand on.
All right. Now we're talking about audits here a little bit. Now, from personal experience, I can tell you that having an audit is about as much fun as having an unanesthetized root canal. Now, what steps should gamblers take to reduce the chances of an audit or to increase the chances of success at that audit if you have to go through it?
That's a really good question. So basically, in general, like for the average taxpayer, your chances of being audited are around 1%. Now, if you're doing if you're in business, you have a sole proprietorship, that goes up to around 3%. If you look at maybe like an S corporation, something like that, your chances of getting an audit go up significantly to maybe 30%. But in general, for most people, your chances of getting audited aren't that high. So I think it's kind of something that a lot of people are really afraid of that isn't that likely. Another thing is just understanding kind of the different types of audits that the IRS does. So, for example, most audits, I believe it's around 70%, are what's called a correspondence audit. And that is usually done by mail or sometimes by email. They'll just send you something in the mail that says, hey, can you provide us with your receipts for your charitable deductions or something like that. Usually it's just limited to like one or two items, or maybe there's like an error. A really common one is, you reported income of $29,000 on a W-2, but the W-2 said $28,000. So maybe there was an error, discrepancy between the W-2 and the tax return. So that's the most common type of audit, is those correspondence audits. And like in dealing with state tax audits, that's most of what we do. Like sales tax audits, they would just say, a lot of times we would never see the auditor. It would be a guy who's, over in a different state, but they would just want to see our tax records to show, that we had properly paid sales tax for all the things that we'd purchased. And, like for some retailers I worked with, were they charging proper sales tax at their registers and things like that. And, they would just send over the accounting records. So it's not always that bad. Now, the next type of audit that the IRS does is what's called an office audit. And these are a little bit more serious. That's when they want you to actually come down to the IRS office. And you'll typically get a letter that explains, hey, you're getting an office audit. And usually they'll tell you, hey, we want to see these records. So they might say, hey, I want to see your mileage log. I want to see, receipts for all of the meals that you bought when you were, off on your gambling trips, things like that. And when you're getting into doing an office audit, it's really important that you do what's called managing the audit. And that's what a good tax professional will do for you, is they'll really work hard to manage the scope of the audit. So a lot of people think that, oh, well, if I just go into this IRS office and I tell them everything and give them all of my business records, then it's going to go really well for me. But usually you don't want to do that because you're opening yourself up to a lot of exposure, and they're going to go through everything and see if there's any tax issues beyond just what they sent you the letter for, and you may be opening yourself up to a lot. So you really want to try to manage the scope and try to keep it as small as possible, because you may get let's say they find an issue, a small issue with one tax year, then they might start going back into tax years, and a small audit can turn into a large audit if you don't manage it properly. And then the last one is what's called a field audit, which is where they actually come out to your home or your place of business, and those are really serious. Sometimes you have like special agents involved, which is like the criminal division. If you get into that type of a situation, they're looking for, if you claim $20,000 in income, but you're living in a $500,000 house or things like that. I would say for most people, if you get into a correspondence audit, a lot of people can handle it on their own. You really don't even need to hire somebody. But once you get into like an office audit or especially a field audit, you definitely want to hire somebody that has some audit defense experience to help you with that and make sure, that you get good representation. But really, winning in an audit, a lot of it is just making sure your ducks are in a row. Your accounting records are complete. They're coherent. They can be understood by someone, by an outsider. Like when I worked in like state tax, we had some auditors. We would send over information that was really difficult to understand, and so the auditors would come in and try to assess everything because they just didn't know what it was. They couldn't understand what the transactions were. They didn't understand the accounting records. So you want your accounting records to be in a format that an auditor can read it and they can understand, okay, this is what he did. He went to this casino, played this game, won this much money or lost this much money, that kind of a thing. Because if they get confused, they're going to try to assess you, typically.
Are there things to avoid that trigger audits? Like, in years past, they used to say that, home office deductions were kind of a red flag, that you didn't want to, have home office deductions because it was more likely to trigger an audit. Are there things like that to avoid?
There are. The home office deduction is one of the big ones that they're really aggressive about overturning that. Like if you, the home office is like you have to have nothing else in your home office. So like if you have a couch, there was like a tax court case, I think, where someone had like a relative sleeping on a couch every once in a while in the room that they had their home office, and they overturned it. So they're really aggressive about that. But in general, I would say if the tax position that you're taking is reasonable, I wouldn't worry too much about the audit. I think a lot of people get so worried about audits that they miss out on tax savings. Like I wouldn't not take a deduction for $1,000 because I was worried about an audit. You know what I mean?
Right, right.
So there are some things that that are more likely to trigger an audit. Like I said, if you're running a sole proprietorship business or something like that, especially if you have losses, that type of a thing. But really, I think if you make sure that your tax positions are correct, like you have an actual something that you're looking at in the tax code and you're doing it the right way, I don't think it's a big issue. The problem is when they audit you and they come in and they find a mess. That's when you get yourself into a lot of trouble.
Right. You mentioned receipts, for meals and stuff on the road. Isn't there, because I'm terrible at that. I don't, save the receipts, but isn't there some sort of standard per diem or something that you can take instead of saving all the receipts?
Yeah, there is. You can do for meals. I want to say it's $75, but don't quote me on that. That you can do.
So you
for
can
meals.
take some standard amount per day rather than save separate receipts for every meal, right?
Right. But that doesn't work for hotels or for mileage. So for mileage, you have to keep a mileage log, and for hotels, you have to have the receipts for your hotels, is my understanding.
And is the credit card statement good for a receipt, or you need an actual receipt?
I would keep the receipt if you can. Credit card statement might be okay, but it may not give you enough detail. Because it may not give you like the state or the that type of stuff.
Right, I see.
But it's better than
It may
nothing.
just say, hey, you're saying, hey, I was out in Nevada, but it just says, whatever, Holiday Inn or something. But yeah, I would be inclined if you could to keep the receipt. It's always good to have as much documentation as you can if you're ever facing an audit.
All right. We're approaching the end of 2013. Are there And sometimes we have a choice as to whether we do things in 2013 or 2014, whether we buy something or sell something of that nature. Are there some relatively simple guidelines to help us decide if we should do it before or after the turn of the year?
Yeah, that's a really good question. And I think it brings up a really good point that I think for most people that aren't tax professionals, most people that I talk to kind of think of taxes as something that's past tense. Like, you do your tax return, in March or April or whatever when you have all your records together. But people in the field of, that are accountants or tax attorneys think of taxes as something that you can kind of plan ahead of time. And so I think one of the problems that a lot of people run into is they go and they do a bunch of business activities, and then they go talk to their accountant about it. But what you want to do is talk to your accountant ahead of time about your business activities and then go do them, because they'll be able to do a lot more to help you ahead of time than they will, kind of looking backwards. Now, for like professional gamblers, well, really for anybody, I think one of the most important things is to do retirement contributions. You can do either a regular IRA or a Roth IRA, something like that. Those are always a really good tax-advantaged way to save money. The Roth IRA is really cool because you can take your contributions back out without facing a tax penalty. So, for example, like if you put $5,000 into a Roth and it grew to $6,000, you could take the $5,000 back out without paying a tax penalty on that. So that gives you a lot of flexibility, if you feel like you might need the money again in a future year. You can also use it for like college savings. I believe the IRA can be used for like a down payment for a house. So there's a lot of cool things that you can do with those retirement accounts. And then for people that are, especially professional gamblers, I would really strongly recommend taking a look at, there are some self-employed retirement plans. So there's what's called a SEP IRA, SEP IRA, and then a solo 401k. And without getting into all of the details of those, basically what they do is they let you make some tax-free contributions to your retirement. And those are really important for self-employed people because they let you avoid not only federal income tax, but also some of the self-employment tax, like the Medicare or the
Social Security.
Social Security and Medicare. It's like 15.3%. So you can avoid some of that by putting your money into a SEP IRA or a solo 401k. So sometimes, you could be saving, if you're making a lot of money, you could be saving 40%, sometimes more in effective tax rate by using one of those. And you can also do some interesting stuff. Obviously you do want to talk to like a financial advisor about this, but you can actually do a lot of interesting stuff where you can invest back into your business with those. You can put money into it, into a retirement plan, and then reinvest it into your business through like self-directed 401ks and things like that. So you may not even, you could still have access to the capital while, taking the tax advantage. So those are a couple of the really big ones that I would tell most people to take a look at, as far as like professional gamblers or,
Actually, two more that I just mentioned this because it happened to me. If you have really different incomes from one year to the next, where you make, say, a lot of money one year and you're not going to make anywhere near that much the next, or vice versa, it's really important to talk to somebody before the end of the year because if you live in a state where you pay state income tax and you put in quarterly payments, whether you put that quarterly payment in before the end of the year or by January 15th can make a huge difference. And also whether you pay your real estate tax before or after the first of the year. And it just depends on, your situation. But I took a $20,000 hit one year because I paid my estimated quarterly tax after the first of the year instead of before.
Yeah. Well, and another thing a lot of people don't realize is you can make contributions for up until tax day. So like for 2013, you can make contributions to your retirement plan up until April of 2014. So a lot of people don't realize that, but you can actually put money into your retirement plan into the next year for the previous year. So.
All right, good. Let's change subjects a little bit. Let's assume, well, in my case, I'm a video poker player. Let's assume that I had a choice of playing a good game in California or Nevada. And other things being equal, are there things...
But you're a resident of Nevada.
I'm a resident of Nevada, but I'm considering playing also in California. Are there things that I should be concerned about on the different taxations in the state as a Nevada resident playing in California?
Absolutely. That's a really good question. There are a number of states that are really hostile to to gambling in general. So, Nevada doesn't have a state income tax, so they're not taxing gambling winnings. But there's some states that have, Connecticut, Illinois, Massachusetts, Michigan, Ohio, West Virginia, and Wisconsin have a tax on gambling winnings, but they don't allow you to write off your gambling losses. Ohio didn't allow the deduction, and then did, and then now they're not allowing it again in the future. And Ohio is really bad because they also have some local income taxes on gambling winnings that don't give you a deduction for losses. So, for example, like say you're playing in Cincinnati or something like that. You go in, you have $1 million in winnings and $900,000 in losses. You may end up, because they have I think it's right around 3% tax. You may end up paying $30,000 in local income taxes on that, even though your winnings were only $100,000. So the effective tax rate can be really high for some of those places that don't have a deduction for gambling losses. Now, a lot of these states do have a deduction if you're considered a professional gambler. So that's kind of one of those things that you may want to talk to a tax advisor about. If you're playing a lot in one of these states, it may make sense for you to incorporate or to file as a professional gambler versus filing as a hobby gambler, because that state tax may make a big difference. It's also important to know if you are paying income tax in one state, you can take a credit for that in another state. So say you're playing in California and you were a resident of a different state that also had an income tax. You might have to pay California tax, like say you hit a slot jackpot or something. You'd have to pay the California tax, but you can take a credit for it on your home state's tax. So that mitigates a little bit some of the effect of those state taxes. But yeah, it's absolutely it's a big difference, and it's also really important as far as state taxes go that you keep track of where your income is coming from, like which state it's coming from, and where your expenses are coming from, because you may be able to write that off. And you want to try to obviously you want to try to push your expenses. If you can take a deduction, you have a bunch of California revenue, you would want to try to take as many California deductions as you possibly can to offset that, because you're paying California tax, versus Nevada, you're not paying any tax. So you don't want to push your expenses into Nevada, you want to push them into California. So that's why it's really important.
So you're saying as a Nevada resident, he should also file a California return?
Yeah, if he's got winnings, he probably has to file a California return.
Winnings, you mean W-2Gs, whether or not I was ahead, or do you mean actually coming out ahead?
Well, it may be. That's going to depend on a couple of factors. One, if the state withheld money from your W-2G, then you may want to file a return even if you had a loss, because you may get all the money back.
Right. Louisiana does that.
Right. Now,
Iowa does that.
Some states are going to make you pay even if you had a net loss for the year. Like I said, Ohio, I think Mississippi doesn't give you a loss doesn't let you take a loss for other states besides Mississippi if you live there. So what you would want to do if they had taken money out of your W-2G, then you may want to file anyways, because you may be getting a refund. it's also important to know there's a lot of states that have a minimum filing threshold. So like I think New Jersey is a $10,000 minimum in gambling winnings before you have to file for New Jersey taxes. There's some other states. I want to say Louisiana is right around $4,000. So some of these states you can go in if you just did one trip and you didn't win a ton of money, you may not have to file a state tax return.
Well, Louisiana takes out in W2Gs 6% before they pay you. So if you earned a $5,000 jackpot, they're going to take out $300 and give you $4,700. And you have no vote in whether or not they do this. You can let them take out more, of course, but they will not take out less. So $1,200 would be the lowest W2G, and they're going to take out their $72 from that. And if you want to get any part of that back, you have to file a Louisiana state tax return.
Right. And that may be a situation where, like I said, I think Louisiana has a minimum. I want to say it's around $4,000. I could be wrong on that, though. But in that case, yeah, maybe they took you only had $3,000 in gambling winnings, and they took a couple $100 out of that. You may be able to file a state tax return and get that back.
All right, we have about 4 minutes left at this point, although we're going to have a question for you at the end as well. Last week we had John Chang and Tommy Hyland on the show talking about blackjack teams. Are there tax or other financial implications to keep in mind when you're forming some sort of a gambling partnership?
Absolutely. You really want to make sure that you're forming the right, there's a number of different entities that you can use. And a lot of the tax planning with selecting a business entity, it revolves around avoiding that self-employment tax. So, for example, if you just go out and gamble, you gamble on your own, that's a sole proprietorship. You have to pay self-employment tax on that. If you and a buddy get together and start a little gambling team, then that's considered a partnership. You have to pay self-employment taxes on all your winnings there. On the other hand, if you set up an S corporation, you can pay some of the money to yourself as salary, and that's going to have the employment taxes on it. But some of the money you can pay to yourself as business income, and that doesn't have the self-employment taxes on it. So that can be a big tax savings if you're going out and winning hundreds of thousands of dollars every year. That can be a huge tax saving to avoid some of that self-employment tax.
Can an individual have an S corp?
An individual, you can have a one-member S corp, is my understanding. The other thing that you can do is you can create an LLC, and you can elect to have the LLC taxed as an S corp. So you don't have to be actually organized as an S corp, because the S corps require you to have annual meetings, and there's all these really restrictive rules on it. But you can actually create an LLC and elect to have it taxed as an S corp. That can be a really good way for a lot of small businesses to do their taxes. For some people, it actually makes sense to do a C corporation as well. That's particularly for people that have high income, because a C corporation only pays 15%. I believe it's 15% on the first $50,000 or so of income. So if you are already earning a high wage, it may make sense to set up a C corporation, because you wouldn't have to pay the self-employment tax. You would just pay the corporate income tax and then pay the dividend tax. And so the effective tax rate might actually be lower for you in some certain situations. So if you're going to be real serious about gambling, I would go, because I don't have time to get into all the details of all the scenarios where these ones make sense, but it can make a lot of sense to go talk to a good tax accountant or an attorney to kind of run some scenarios as far as what your income's going to be and how much kind of tax you're going to owe for those, because it can really save you a lot of money if you pick the right business entity.
Good. This was very interesting, and we're going to have a couple more questions for you later, including how should our listeners get a hold of you should they find out that they have an audit coming up and you sound like the guy they want to deal with, or something of that nature. So we'll be talking to you in a few minutes. The South Point has more than 10,000 games, returning more than 99%. That's more than anybody else has. Between December 15th and 30th, you get 50% off of most everything while using your points. including restaurants, liquor stores, showrooms, spa, movies, etc. They have done this several years in the past in December, which is a good reason not to cash out all your points early, unless, of course, you have a losing year and you want to get your tax write-off in the current year. The 50% off is even good for New Year's Eve parties. Bonnie and I are going to be attending the Tony Orlando concert there, but the main attraction to us is that they have an excellent piano player, Wes Winters, who's the opening act, and so we're going to be dancing. I didn't pick the name dancer because I like to sing. Monday through Saturday of this current week, December 16th to 21st, players who earn $1,000 coin in at video poker or $400 coin in at slots earn an electric knife with a carving fork, which may be picked up Sunday through Tuesday of next week. Double point day this month is Christmas Day, December 25th, midnight to midnight, no limits. If you're looking for me, check out the Quick Quads machines during Graveyard. There's no official word yet, but I'm expecting New Year's Day also to award double points. The next semester of free video poker classes at the South Point will begin Wednesday, February 5th, and will continue for 10 weeks. I'll give you the exact schedule as we get closer, but having them on a Wednesday is new. The last, 10 semesters I've had were on Tuesdays, so Wednesdays is a different day of the week. The casino has decided that's where they want the extra people in there. At the Palms, the $62,000 Greedy Grinch drawing consists of 5 winners each Friday and Saturday night at 8 p.m. who are going to grab 1 in 10 money bags, where the top prize on the board is $4,000. Points are earned playing the machine since the preceding Saturday at 8 p.m. Friday and Saturday evenings, you receive 5 times drawing tickets for the next drawing. For PEW, Play, Earn, and Win, Monday, Wednesday, Friday, from now until December 23rd, which is next Monday, so it's just Friday and Monday this time, is going to be gift cards. Up to $200 in Visa gift cards, plus there are $5 cards for a few different outlets. They're going to be earned on each of these days at a rate of 0.22% for video poker and 2.9% for slots. In the past, you could carry them over from one day to the next. You cannot. So if you don't redeem your points before the 10 a.m. or midnight deadline, you don't get anything for it. Videopoker.com remains the best place to practice a very wide variety of games, including Quick Quads, Ultimate X, Extra Draw Frenzy, Hyper Bonus, among others. Often these games are the best returning games in a casino, and you need to practice them to make sure you know how to play. While the website is free to use, gold memberships avoid pop-up, and you're also allowed to change pay schedules on the games, and in some cases get the right-wrong correction with respect to whether they have made the correct play. Correction for some of these games is available nowhere else. The monthly contest, which will start Christmas Eve and go until the end of the year, will be Hyper Bonus Poker. Hyper Bonus is similar to Super Times Pay, except in Hyper Bonus you get the bonuses every time you are dealt a paying hand. It requires 10 coins per line rather than normal 5, and the return is always better than what you started with. In other words, if it's a 99% game with hyper bonus, it's now a 99.3% game or somewhere in that nature. You do not need to change your strategy. If you knew the strategy for the game on a regular machine, you know it on the hyper bonus. All right, next week we're going to have Brian McAllister. Brian has been on our show before as he's an advantage video poker player, and so he had some pretty cool stories he told us. He's also an options trader. Now, in many respects, options trading is the biggest casino in the world. Brian's going to be telling us how options trading is similar and how it's different from gambling. And I heard a preview of this talk at another location recently, and it was a lot of fun. He's calling it gambling with a hedge, so it's just a a cruel way to guarantee that we had to have him on this show, but it worked, so you got to give him a little bit of credit for that. All right. So, excuse me, Moo the cash cow, we're back to you. If somebody wanted to get in touch with you, either for accounting services or otherwise, how would they do it?
Well, right now I'm working for a public accounting firm, so, but I don't necessarily want to give out my contact information and stuff over the, because I still play a lot. But yeah, I mean, if people want to send me like a private message on Norm's site, that's probably a really good way to get a hold of me.
Norm's site is blackjacktheforum.com.
Yeah. And yeah, to give you an idea, I mean, we charge typically probably about $75 to $200 an hour for our services, depending on kind of the complexity of it. So, it's a little cheaper than like Big Four accounting, but if you're a red chipper, it may not make sense to hire us. But yeah, if anybody wants to talk to me, just they can send me a PM on Norm's site, and even if it's just basic questions or something like that, I can definitely try to help people out with that kind of thing.
And your handle on Norm's site is Moo321, is it?
Yeah.
Moo321, yeah.
All right. So we got about 2 minutes. And in addition to being a tax guy, you're also a player. What would be the best 2-minute story from a casino or complexing that you have?
Well, I got a couple good ones.
Pick a 2-minute one.
Yeah, there's one. So I'm at the Venetian in Las Vegas, and I'm in a bathroom stall, and I hear two guys get into the stall next to me, and they start whispering to each other, and I'm like, oh, what's going on? So I do the awkward bathroom cough so that they know I'm there, and they keep whispering about something, and I was afraid that they were going to do some kind of weird sex act, but then all of a sudden I hear snorting, and I was like, oh, they're just doing cocaine. It's fine. They're not doing anything. It's just cocaine. Another time I was down in Tunica, and this guy was sitting in a wheelchair between two slot machines, and he's playing both of them. And as we get closer, we realize that the guy had stolen a pair of tongs from the buffet because he couldn't quite reach both of the buttons on the machines from his wheelchair.
Wow.
But when he had the tongs, he could reach both of them. And I saw a lady in Atlantic City doing...
Well, let's talk about the tongs. We still have 45 seconds left. And I want to give the guy credit. He might have brought them from home. You can buy those. You don't have to steal them from the buffet. But buttons on it are kind of slippery, and their thing, you have to hit it just right. Did he have a rubberized thing at the end of the tongs?
No, they were just plastic. And he was just reaching over and mashing the button on each one from his wheelchair.
Wow.
You see the weirdest things in casinos.
That sounds air prone, especially if his left hand isn't as good as his right hand or vice versa. Anyway, Moo the Cash Cow, thank you very much. We hope everybody goes out and hits lots of royal flushes. Good night, everybody.
You've been listening to Gambling with an Edge with your hosts, Bob Dancer and Richard Munchkin. Subscribe to the show in iTunes, and episodes will be delivered to you automatically every week. Archived versions of past shows may be found at bobdancer.com and richardmunchkin.com. We welcome emails at gamblingwithanedge@gmail.com. Bob Dancer and Richard Munchkin are both available on Facebook and welcome your questions. The sponsors for the show are the South Point Hotel, Casino and Spa, the M Resort, the Palms Casino Resort, and the website videopoker.com. Join us again next week for another Gambling with an Edge.